The Algebra of Wealth, a simple formula for financial security. Written by Scott Galloway. Summarized by Detailed Book Summary. Don't forget to subscribe. Chapter 1. Getting rich is not a goal, it's a system. Wealth. The word sounds heavy, sharp, desirable, and yet misunderstood. When most people hear wealth, they picture Lamborghinis, penthouses, yacht parties, maybe someone sipping Cristal in a private jet. But in the Algebra of Wealth, Scott Galloway slices through all of that noise. He's not here to sell you a fantasy. He's here to teach you the system. And it starts with this. Getting rich isn't about luck. It's about math. Not math in the traditional sense. Not calculus. Not compound interest spreadsheets. But a formula, a personal algorithm that blends ambition, grit, and strategy. Galloway calls it the Algebra of Wealth. And right out the gate, he tells us his formula is real, repeatable, and accessible. He should know. He wasn't born into money. He built it. And he begins by separating wealth from income. This is important. Most people confuse the two. Income is what you earn. Wealth is what you own. Let that sink in. You can be making 6 figures a year and still be broke. Why? Because your time isn't yours. Your stress isn't optional. And your calendar? It belongs to someone else. Wealth, Galloway says, is freedom. The ability to wake up and decide how you'll spend your time. To say no to things that drain you. To take a breath without panicking about rent. That's real wealth. So how do you get there? Galloway opens with the big picture for variables in his algebra. Stoicism, focus, time, and diversification. Let's break them down. Stoicism is the first one. And it's not about wearing a stone face or quoting Marcus Aurelius on LinkedIn. It's about being able to resist the gravitational pull of lifestyle creep. That new car? That bigger apartment? The $300 dinners you tell yourself you deserve? They're traps. Galloway warns that as your income increases, so does your appetite. And if you're not careful, you become addicted to status. But Stoicism is a superpower. It means choosing the long term over the immediate. It means not letting someone else's Instagram post make you feel poor. If you can delay gratification, you build runway. If you can't, you're stuck on the treadmill forever. Then comes focus. Not just the ability to lock in on a task, but the courage to commit to a path. Galloway calls out the danger of dabbling. The modern economy rewards those who go deep, not wide. Specialists, not generalists. People who become so good at something, the market can't ignore them. He's blunt here. Pick a lane. Stick with it long enough to gain traction. Most people jump from thing to thing, chasing novelty or reacting to boredom. Wealth comes when you compound your effort, not when you constantly reset the game. Time is the third. This one's non-negotiable. Galloway reminds us that wealth is a function of time. The earlier you start, the less perfect you have to be. The later you start, the more aggressive and precise you must become. Time is your biggest lever. He shares how investing early, even if small, sets you on a trajectory most people only dream about. Why? Because the market rewards duration, not just intelligence. You don't need to outsmart Wall Street. You need to outlast it. And the final piece is diversification, but not just of assets, of identity. Yes, you should diversify your income streams. Yes, you should avoid putting all your financial eggs in one basket. But Galloway goes deeper. He talks about diversifying who you are. Don't tie your whole identity to a job title, a company, or a role. Because one day the market shifts, the job vanishes. And if your entire sense of worth was wrapped in that role, you go down with the ship. Diversification means building skills, building relationships, building resilience. Now, throughout this first chapter, Galloway isn't whispering. He's not hand-holding. He's talking to you like the sharp uncle who made it out and wants you to do the same. He tells the truth, that most people won't get rich overnight. That passion is often a privilege, not a starting point. That you may need to eat sh*t for a few years, saying yes to jobs that don't thrill you, grinding through 80-hour weeks, taking risks when no one's cheering you on. But the reward for that grit? Freedom. And more than that, the ability to write your own story. You don't need to invent the next Google. You don't need to be a crypto wizard. You need to understand that wealth is built with deliberate effort and smart trade-offs. It's an algebra, a formula. And if you're listening to this right now, you've already started solving it. Chapter 2, The Lie of Passion. Follow your passion. That's the mantra, right? The bumper sticker. The TED Talk headline. The life advice served to college grads with a smile and a handshake. But Scott Galloway has a different message, one that hits harder and lands deeper. Passion is not a plan. It's a byproduct, a consequence, a luxury that comes later, not something you start with. In this chapter, Galloway doesn't tiptoe around this myth. He kicks it straight in the teeth. He says the obsession with passion is one of the most toxic lies we've been sold. Not because passion is bad, but because we've misunderstood where it comes from. Let's be honest. Telling someone to follow their passion sounds great when you've already made your millions. But for most people, it's a trap. It keeps them chasing feelings instead of building skills. It makes them jump from thing to thing, hoping to fall in love with the work, instead of learning to get good at it. And here's the truth most people don't want to admit. You don't find passion. You earn it. Galloway shares his own story. He didn't wake up one morning passionate about business, branding, or teaching. He built companies. He struggled. He got good at something. And over time, that became his passion. Not because it was romantic, but because he got results. And results feel good. You don't feel passionate about something you suck at. But when you're excellent, when people pay you, when you built leverage and momentum around skill, passion tends to show up right on schedule. He gives a brutal but honest analogy. Imagine asking a 22-year-old to follow their passion, and that passion happens to be painting or gaming or surfing. That's great. But without a plan, without a way to monetize that passion, that person's going to be broke, anxious, and increasingly bitter when the world doesn't hand them a paycheck for loving what they love. What works instead? Pursue excellence. Find something that the market values, something people will pay for, and then sink your teeth into it. Learn it, master it, beat your peers at it. Passion often sneaks in the back door once you've earned respect, results, and autonomy. Galloway doesn't say, never follow your passion. He's not heartless. He's strategic. He says, let passion follow you. He also reminds us that passion is often a product of gratitude. When you're winning, when you can pay your bills, invest in your future, support your family, when you have autonomy and time and the feeling of being good at something, you'll start to feel passionate. You'll even start to feel purpose. But it starts with the unsexy stuff. Discipline, representatives doing things you don't love, so you can build the life you will. He calls out the culture of entitlement, the idea that your career should feel amazing from start, that you should be inspired, fulfilled, and ecstatic every day. That's not reality. That's dopamine marketing. Real success looks like years of grind, uncertainty, and setbacks before it clicks. And here's something that hits hard. Galloway says passion is over-indexed among the rich. In other words, once you have money, you suddenly discover all these passions you didn't know you had. Wine, travel, philanthropy, writing. Why? Because now you can afford to care about them. You've got time. You've got room to breathe. Passion at that stage is no longer a career strategy. It's a bonus. So what should you focus on instead? Find a place where your competence meets demand. That's where the gold is. That's where wealth lives. That's the place where your effort turns into leverage and your work starts working for you. And eventually, once the dust settles, you might look around and realize you do love what you do. Not because it felt magical from day one, but because you mastered it and it changed your life. Galloway's message in this chapter is clear. Don't chase passion. Chase skill. Chase discipline. Chase ownership. Let passion be the reward, not the prerequisite. That's how the system works. And that's how wealth starts to build, not just in your bank account, but in your sense of self. Chapter 3, Get Certified. Scott Galloway doesn't play games when it comes to advice. And in this chapter, he gets right to the point. Credentials matter. And not in a soft, feel-good, just try your best kind of way, but in the hard, statistical, life-altering sense. He calls it getting certified. And no, He's not talking about motivational YouTube course or a quick-hit certification from some obscure platform. He means legit credentials, degrees, licenses, certifications that signal competence, resilience, and commitment. This chapter is not romantic. It's real. Galloway doesn't tell you to skip school and become the next tech disruptor. He doesn't glorify the outlier stories of the college dropout who became a billionaire. In fact, he demolishes that myth, because for every Zuckerberg or Jobs, there are millions who dropped out, tried to be the exception, and fell through the cracks. The truth? Formal education is still the most reliable path to wealth creation. He breaks it down. People with a bachelor's degree earn significantly more over a lifetime than those without one. Add a graduate degree in a high-demand field, the gap widens. It's not sexy, but it's math. It's data. It's your odds. Credentials aren't just about knowledge. They're about signaling. A degree doesn't tell the world you're the smartest person in the room. It tells them you showed up, you endured, you followed through. And in a noisy marketplace where everyone's trying to stand out, that signal is powerful. Now, Galloway doesn't worship academia. He's not saying rack up student loans chasing impractical degrees with no return. He's clear. Get certified in something the market values. STEM, business, healthcare, law, finance, engineering. These are not random guesses. These are industries where supply and demand still rule. If you get certified in one of these spaces, your earning potential and economic mobility increase dramatically. Period. He says this straight. You don't need to be passionate about accounting to get rich. You need to be good at something that pays. And that starts with getting credibility. And here's where he adds nuance. Certification isn't just about degrees. It's about proving you're the real deal. You can also get certified by results, by starting a business, building a portfolio, creating content that gets traction, launching a project that solves a problem. But those paths are harder, lonelier, less forgiving. Most people won't make it. So, if you have the chance to attend school, go hard. And if you can't, find an alternative path that proves, clearly, that you know what you're doing. Galloway is also blunt about the prestige gap. Not all schools are created equal. He doesn't sugarcoat the fact that elite institutions open more doors, not because the education is dramatically better, but because of access, networks, alumni pipelines, a brand that does the talking before you walk in the room. But he's also fair. He says, don't chase brand at the expense of debt and despair. Go to the best school you can afford. Maximize value. Minimize cost. Play the game with strategy, not ego. And here's a line that hits hard. Credentialing is not about ego. It's about survival. In a world that gets more competitive every year, you need a moat, something that protects you from economic volatility, layoffs, and AI disruption. A strong credential is one of those moats. It builds trust before you say a word. It opens rooms you might not otherwise enter. And when you combine that credential with competence and character, that's when the market pays attention. So whether you're 18 or 48, whether you're considering school or upskilling mid-career, this chapter is your wake-up call. Get certified. Stop hoping to be discovered. Stop clinging to outlier stories. Stack the odds in your favor. Because in the Algebra of Wealth, credentials multiply your credibility. And credibility? That's the currency you trade for opportunity. Chapter 4, Be Great. You've heard it a million times. Good is good enough. Scott Galloway doesn't think so. In Chapter 4, he drops the pretense and tells it like it is. In today's economy, being good doesn't cut it. You don't get rich by being average. You don't buy back your time, your freedom, your options by being solid. You need to be great. Period. Not perfect. Not a genius. But undeniably excellent at something that matters. Here's the truth Galloway wants you to face. The world is a tournament, and most of the rewards go to the top 10%. Not because they're better people. Not because they were born into luck. But because they invested the time, the reps, the obsession. This chapter isn't about talent. It's about intentional, focused effort. He leans on a brutally honest reality. The market doesn't pay for effort. It pays for excellence. And that means if you want to move the dial, If you want to earn disproportionately, build wealth, create leverage, you have to choose to be great at something valuable, something in demand, something rare. Not everyone could be a tech founder or a hedge fund wizard, but everyone can choose to be top tier at something, and the world will pay for that. Galloway uses this formula. Wealth equals skill x leverage x scarcity. Skill means you're good. Leverage means what you do scales through technology, teams, or tools. Scarcity means not everyone else can do it. You combine those three, and you've got a money machine. But here's the trick. You don't start great. He's clear on this. Greatness is not about some mythological talent you're born with. It's about deliberate practice. It's about waking up earlier, getting sharper, making mistakes, learning, repeating. Most people tap out when things get hard. The great ones, they lean in. Galloway shares something else too, something most people overlook. Being great at one thing opens doors to everything else. When you dominate one arena, the market assumes you're competent elsewhere. Your credibility expands. Opportunities start showing up. You move from chasing jobs to being chased. And that's when life gets interesting. He also drops this uncomfortable truth. The middle is crowded. The middle is where pretty good lives, where the resumes all look the same, where people get stuck. If you want to escape that, you need to do the work most people won't, to become part of the top 10% in your domain. And this is a moral thing. It's not about proving anything to the world. It's about buying back your life. Because when you're great at something, you get to set the terms. You charge more. You negotiate from strength. You move when you're ready, not when someone else says so. Galloway doesn't suggest you chase greatness in everything. That's exhausting. Instead, he says, pick your lane, then crush it. Maybe that lane is data science, or logistics, or copywriting, or real estate. It doesn't matter what the field is. What matters is that the world needs it, and you become unignorable inside of it. And when you're great, you become part of what he calls a high-velocity network, where deals, ideas, mentors, and money move faster. You're no longer on the outside trying to get in. You are the room. So let's bring it home. If you're just good, nice, capable, average, you'll probably survive. But if you want freedom, leverage, wealth, be great. Pick something the world values. Do it better than 90% of people. And keep refining until your name means something in that space. Because in the Algebra of Wealth, greatness isn't a luxury, it's a multiplier. Chapter 5, Focus. Focus. It sounds simple, clean, sharp, but Scott Galloway makes it clear. Focus is a full contact sport. It's not a productivity hack. It's not something you practice once a week while sipping oat milk lattes and pretending to ignore your phone. Focus is a skill, a weapon, and if you want wealth, not just money, but autonomy, freedom, control, you'd better learn how to wield it. In a world built to distract you, focus is rebellion. Every notification is a tiny theft. Every social scroll a soft seduction. Every urgent email and interruption disguised as importance. The world will not hand you time. It will take it every single day. And unless you learn to guard it ruthlessly, you'll lose the one currency more valuable than cash, your attention. Galloway opens with a simple truth that most people miss. Wealth is built through concentration of effort over time, not through scattered projects, not through endless side hustles, not through trying to be a jack of all everything. Wealth rewards people who pick a lane and stay in it long enough to matter. The problem? Most of us are stuck in the cult of busyness. We glorify multitasking. We say yes to too much. We confuse motion with progress. But Galloway says it flat out, multitasking is a lie. Your brain isn't made to do two complex things at once. Every time you switch from task to task, you bleed energy, attention, momentum. And most people are bleeding all day. He urges you to do something radical. Focus on one thing until you become undeniably great at it. That doesn't mean you can't be curious. It means your professional energy must be finite, deliberate, and directed. Think laser, not floodlight. The market doesn't pay for effort. It pays for impact. And impact requires depth, not dabbling. Galloway offers a formula, unstated, but lived. Wealth equals skill x focus x time. You can have all the talent in the world, but without focus, it never compounds. You can work for years, but if you're switching gears every few months, you reset the clock every time. Focus, he says, is the multiplier. It's the thing that turns a decade into dividends. And this isn't just about your job. It's about your whole life. He breaks it down in 3 ways. 1. Career focus. Commit to a domain. Stay long enough to master it. Don't flinch every time a new opportunity flirts with your insecurity. When you jump from thing to thing, you never gain traction. Focus is what builds a momentum that builds a wealth. 2. Time focus. Audit your day. Look at how much time you actually spend doing the things that move you forward. Most people are reacting all day long. Emails, pings, meetings. Galloway challenges you to flip that. Block deep time for real work. Push everything else aside and let the shallow stuff sink to the bottom. 3. Emotional focus. This is a hidden tax no one talks about. If your mind is filled with drama, comparison, bitterness, or fear, you'll never have the bandwidth to perform at your peak. Galloway is blunt. Protect your mind like you protect your money. Cut toxic people. Stop feeding your ego with validation snacks. Focus isn't just about tasks. It's about energy alignment. He says something that stings because it's true. You will either learn to focus, or the world will decide your future for you. Let that land. You're not going to build a great business, a great body, a great family, or a great bank account by accident. You have to choose your priority. Then guard it like a wolf. That means saying no to most things. That means disappointing people. That means missing out on shiny distractions. And yes, that means being misunderstood. But the people who build wealth, they don't apologize for their focus. They own it. So ask yourself right now, what are you really focused on? Not what you say you're focused on. What do your actions reveal? If your calendar is a mess, if your brain is fried, if you feel constantly busy but rarely fulfilled, you're not focused. You're scattered. And scattered people don't build wealth. They just survive. Galloway isn't interested in survival. He's building empires and telling you how to build yours. So pick the thing that matters. Cut the distractions. Pour your time, your talent, and your full mind into it. And hold the line, day after day, quarter after quarter. Because in the Algebra of Wealth, focus isn't optional, it's foundational. Chapter 6, Time. Time. It's the most valuable resource you have, and the most underpriced. You can lose money and make it back. You can wreck your reputation and rebuild it. But when time slips away, it's gone forever. That's why Scott Galloway doesn't treat time like an ingredient. He treats it like the entire recipe for wealth. In this chapter, Galloway drills home a message you probably heard before, but never like this. Wealth creation is a function of time, not talent, not genius, not even hard work alone. Time. The longer you give your efforts room to compound, the greater the rewards. Period. This is a harsh reality. Most people wake up at 35 or 45 and realize they've been reacting their whole lives, living paycheck to paycheck, letting months blur into years, waiting for the right time to start building. But Galloway's warning is clear. There's no perfect moment. The clock is ticking. The market doesn't wait for you. He introduces the idea of compounding, not just financially, but across all domains. And here's where it hits. Compounding doesn't just apply to interest rates. It applies to knowledge, reputation, trust, skill, relationships. Every day you delay, you rob your future of exponential returns. Take investing, for instance. He explains how even modest contributions, when started early, snowball into real wealth. It's not about being brilliant. It's about being consistent over time. People obsess over picking the right stock. The truth? Picking the right timeline matters more. Start earlier, and you need less brilliance to win. But Galloway isn't just talking about money. He's talking about how you spend your life. He introduces what he calls the time/wealth ratio. It's not enough to have money if you've got no time to enjoy it. And it's not enough to have free time if you're broke and anxious. Wealth isn't just dollars. It's a control over your own calendar. And that, he says, is the real flex. Waking up and choosing how you'll spend your hours. Not because someone told you to. Not because you need to survive. But because you built the kind of life where time belongs to you. So how do you get there? You stop wasting time on things that don't build. You stop chasing validation, revenge, or drama. You stop giving your best hours to scrolling, to TV, to people who drain you. You get serious about owning your time. And that starts with structure. People think freedom means no schedule. Galloway says the opposite. Freedom comes from discipline, from managing your calendar like a CEO, from treating your time as if it were money you could never earn back, because you can't. He breaks it down into choices. Spend 10 years getting good at something valuable equals freedom later. Spend your 20s building assets, not just income, and they'll pay you in your 40s. Spend your days wisely, and you won't have to sell them for dollars forever. He warns about one of the biggest time thieves, lifestyle inflation. You start making money, and suddenly your expenses rise to meet it. You buy things to signal success, to feel worthy, to impress people who don't even care. And without realizing it, you trade time for toys. And worse, you lock yourself into a life where you need more money to maintain your image. He's brutally honest. That's not wealth. That's a golden prison. Real wealth is having time to think, time to heal, time to build. It's going for a walk in the middle of the day, taking a vacation without guilt, having dinner with your family without checking Slack. That's time wealth. And it's only possible when you play the long game. Galloway urges you to reverse engineer your time. What are you doing today that creates leverage 5 years from now? What decisions are you making that future you will either celebrate or regret? Are you building something that compounds or burning time on things that don't? Because here's the final punch. Time doesn't care about your feelings. It doesn't slow down because you're confused. It doesn't wait while you find yourself. It moves every minute, every day. And every moment you treat time casually, you're choosing poverty, financially, emotionally, spiritually. So what's the solution? You treat time like the asset it is. You invest it, protect it, allocate it with intention. And you remember that in the Algebra of Wealth, time isn't one of the variables. It's the foundation under every formula. You don't get rich overnight. You get rich over time if you respect time. Chapter 7, Diversify. Diversification. It's not flashy. It's not sexy. It won't make headlines. But Scott Galloway says it's one of the smartest, most underrated moves in your entire wealth strategy. Because while others are chasing unicorns, timing markets, and gambling big on moonshots, the people who actually build and keep wealth, they diversify. And it starts with this simple truth. No one knows what's going to happen. Not you, not your broker, not the talking heads on financial news. Markets rise. Markets crash. Jobs vanish. Saktos imploda. Innovation explodes in unpredictable directions. And the biggest financial pain usually comes when people are overexposed, when they bet too much on one outcome, one job, one stock, one sector. Galloway says diversification is your defense. It's your cushion. It's how you survive the punches and stay in the game long enough to win. Because in wealth building, survival is underrated. He puts it plainly. You get rich by concentrating, but you stay rich by diversifying. That line says it all. Yes, early in your career or business, you may need to go all in on a single skill, company, or opportunity. That's where leverage lives. But once you've built something, once you've got assets, income, momentum, you shift. You don't double down. You spread out. And it's not just about stocks. Diversification applies to everything. Your career. Don't rely on one income stream forever. Build multiple revenue lines over time, whether that's a business, a side hustle, investing, royalties, or equity in companies. Your relationships. Don't pour your emotional world into one person, one group, one identity. That's fragile. You need a social portfolio, people who sharpen you, support you, stretch you, your skills. Galloway calls this talent diversification. It means you don't become one-dimensional. You may master one skill, but you also layer new ones communication, leadership, tech literacy, negotiation. That makes you adaptable. That makes you valuable across industries and eras. Your time. Don't allocate every hour to one obsession. Have room to breathe, rest, think, pivot. Burnout isn't a badge of honor. It's a symptom of poor allocation. And of course, your financial assets. Here, Galloway goes back to the fundamentals. Invest in index funds, not individual stocks. Hold a broad basket, U.S. markets, international exposure, bonds, real estate. Don't try to beat the market. Try to own the market. He warns against the biggest lie in modern investing. You can time this, that you can read trends, move in and out, and win big. Maybe once. But over time, that game eats most people alive. Instead, he says, you build a portfolio that wins even when you're wrong, because diversification protects you from your own ego. He also calls out FOMO culture. Everyone's talking about crypto or tech stocks or startups. Everyone's posting their screenshots and success stories. But that's a highlight reel. Galloway reminds you, no one posts their losses. The best investors in the world are wrong all the time. Their secret? They don't bet everything on being right. Here's the gut punch. Concentration builds wealth. Ego destroys it. Diversification preserves it. You may have a windfall, a big win, a lucky break. But if your entire life is tied to one outcome, you're fragile. You're one shock away from collapse. And this is personal for Galloway. He talks about how he sold his company, made millions, and then diversified hard. He didn't gamble to double it. He moved to safety, bread and butter, low drama, long game. Because real wealth isn't measured by how much you make. It's how much you get to keep. So what should you do? He lays it down. 1. Spread your bets. Not equally, not blindly, but intelligently. Across asset classes, across opportunities. 2. Lower your risk as you age. In your 20s, you can take bigger swings. In your 40s, protect the base. In your 60s, play defense. 3. Diversify the income. Your salary is not your safety net. Build alternate flows, even small ones, so you're not owned by one paycheck. 4. Keep it boring. Boring is beautiful. Boring compounds. Boring wins. And most of all, don't get seduced by stories. Get grounded in systems. Because in the algebra of wealth, diversification is a silent protector. It doesn't make noise. It doesn't promise fireworks. But when the storm hits, and it always hits, it's the reason you're still standing. Chapter 8. Don't try to beat the market. Let's get something straight. You're not going to beat the market. And if you're honest with yourself, you already know that. Still, the temptation is always there. The seduction of being the one who spots the next Amazon before everyone else. The thrill of buying low and selling high. The belief that if you just hustle hard enough, read enough Reddit threads, or watch enough market gurus on YouTube, you can game the system. But Scott Galloway doesn't entertain fantasies. He deals in reality. And reality is this. The market is smarter than you, faster than you, and more importantly, ruthless about punishing overconfidence. Every time you try to outthink it, you're stepping into the octagon with high-frequency traders, billion-dollar funds, and algorithms that don't sleep. You think your instincts will beat all of that? Please, this chapter isn't about crushing dreams. It's about protecting your financial future from your own ego. Galloway drives home a painful but liberating truth. Even the so-called experts, professional money managers with decades of experience, can't consistently outperform the market. Study after study shows it. They try to beat the S&P 500, and most fail. And even the few who win in one year often give it all back in the next. So if Wall Street's elite can't win this game, what are the odds you'll do it in your spare time on your phone? Slim to none. That's why Galloway urges you to stop pretending you're a trader and start behaving like an investor. Stop chasing alpha and start focusing on exposure to the market as a whole. That means buying index funds. Simple, boring, efficient. Funds that track the S&P 500. Funds that mirror the total U.S. stock market. Funds with ultra-low fees and broad diversification. He's not being conservative. He's being realistic. The fastest way to grow your wealth isn't trying to beat the market. It's owning the market and letting it work for you over time. And that's the key, time. Trying to beat the market is a short-term mindset. It's reactive. It's based on impulse, hype, and the fear of missing out. Investing in the market and leaving it alone, that's long-term discipline. That's trusting the one force you actually can control, compounding. You don't have to be brilliant. You don't have to outguess anyone. You just have to start early, contribute consistently, and stay in. Galloway makes it even clearer. He doesn't just say buy index funds. He says automate the habit. Set up monthly investments. Dollar cost average into your funds. Whether the market is up, down, or sideways, you're buying. No emotion, no drama, no headlines influencing your behavior. Because that's another point. The media exists to create noise, not wealth. Headlines scream about crashes and bubbles. Experts debate interest rates like they've seen the future. But the only thing they're selling is attention. And if you let that infect your strategy, you're done. Here's what happens when you ignore the noise and play the long game. You minimize fees because index funds are cheap to hold. You defer taxes because you're not constantly buying and selling. You stay invested, which means you don't miss the days when the market jumps. And missing just a few of those days can ruin your long-term gains. You sleep better because you're not glued to your phone every time the Dow drops. And Galloway reminds you of something you'll rarely hear from someone selling advice. This path is boring. There's no adrenaline rush. No hot tip. Just a methodical accumulation of wealth over time. But boring is good. Boring is safe. Boring gets rich. Now, he's not saying you can't play with a small chunk of your portfolio. If you want to take 5 or 10% and try your hand at individual stocks or speculative bets, go ahead, scratch the itch. But know that's not your wealth engine. It's your entertainment budget. The rest of your money, it stays disciplined and diversified. He even puts a nail in the coffin of the ego by saying, it's not about being right. It's about being rich. Most people lose money not because they lack intelligence, but because they try to prove something. They make risky moves to feel clever. They sell early to feel secure. They hold too long to feel proud. And the market punishes all of it. So what's the smarter play? You pick a strategy that doesn't require you to be a genius. One that works when you're distracted, tired, or unsure. You bet on the American economy, the global economy, the innovation machine, and you let it do the work for you. And then you do the hardest part of all, nothing. You don't panic. You don't pivot. You don't wait for a better entry. You just invest and keep going. Because in the Algebra of Wealth, you don't win by beating the market. You win by staying in it. Chapter 9, Own a Home. For Scott Galloway, owning a home isn't just about shelter. It's about power, security, leverage, stability, and in many cases, wealth. But let's be clear, this chapter isn't a romantic ode to white picket fences and granite countertops. It's a calculated, rational, and strategic argument for why owning your primary residence might be one of the smartest financial decisions you can make in your lifetime. Not because it'll make you rich overnight, but because it protects you from being poor later. Galloway starts with a brutal fact. Renting is necessary at times, but it's rarely wealth building. When you rent, every dollar you spend disappears. It goes to someone else's mortgage, someone else's equity, someone else's financial future. And while renting might give you flexibility, it gives you nothing in return. He's not saying everyone should buy a home tomorrow. In fact, he's very specific. Buy a home when you're ready to stay in one place for at least 5 to 10 years. Why? Because the cost of buying and selling, closing costs, agent fees, taxes, makes short-term ownership risky and expensive. But once you're settled, once you're stable, once you're rooted, then owning a home becomes one of the most effective passive investment tools you'll ever touch. Why is that? Because real estate, especially your own home, forces two behaviors that most people struggle with: saving and staying put. The mortgage becomes a kind of automatic savings plan. You make that payment every month, and a portion of it goes toward principal. Slowly, quietly, you're building equity. You're converting income into an appreciating asset, and you're doing it on autopilot. That's what makes homeownership so powerful. It uses discipline by design. Renting, on the other hand, demands constant willpower. You got to consciously set money aside every month. You got to resist lifestyle creep. You got to hope you don't get priced out by rising rents or pushed out by landlords who want to sell. It's a fragile setup. Galloway brings it back to math. Home values over time tend to appreciate modestly, but when you combine that with leverage, the return becomes meaningful. Put 20% down on a property, and you control 100% of the asset. So if the property goes up 3% in value, your equity didn't grow by 3%. It grew by 15%. That's the power of leverage when it works in your favor. Now, he doesn't shy away from the downsides. Homeownership isn't liquid. You can't cash it out instantly. It ties you to one place. It comes with maintenance, taxes, and occasional surprises. A new roof here, a broken pipe there. But none of that erases the upside. Because while the stock market can be volatile and emotional, real estate often behaves like the tortoise. Slow, steady, and quietly compounding. And over decades, that kind of consistency wins. He warns, however, against overextending. Just because you can buy doesn't mean you should buy more than you can afford. The bank will often approve you for more than is wise. Galloway's advice is this: buy less house than you think you need, not just for affordability, but for mental peace. A modest home with a manageable mortgage can be a fortress. An oversized home with crippling debt? That's a trap. And here's where he shifts from logic to legacy. Owning a home anchors you. It roots you in a community. It gives your kids stability. It gives you leverage in your retirement planning. It's more than square footage. It's a platform for freedom. Because when you own a home outright or have significant equity in it, you have options. You can downsize and cash out. You can borrow against it for investments. You can rent it and earn income. You can stay peacefully without fear of rent hikes or eviction. In a world of uncertainty, homeownership is one of the few things that can't be taken from you easily. So Galloway's take is clear. If you plan to stay put, if you have the means, and if you're ready to build not just income but real generational wealth, then buy a home. Make it boring. Make it modest. Make it permanent. And let it do what it's done for millions of others over generations. Turn income into security. Turn security into equity. And turn equity into freedom. Because in the Algebra of Wealth, owning your home doesn't just build your net worth. It builds your life's foundation. Chapter 10, Be a Stoic. In a world that constantly tells you to chase more money, more attention, more dopamine, Scott Galloway offers a counterpunch that lands hard. Be a Stoic. Not the emotionless robot you may be imagining, but someone who practices restraint, perspective, and clarity in a culture that thrives on chaos and consumption. Because here's the truth. Wealth is as much about mindset as it is about money. You can earn millions and still feel broke. You can live in luxury and still be trapped by insecurity and anxiety. You can hit every financial benchmark and still lose the plot entirely. Why? Because the world has trained you to believe that success means more. More income, more followers, more likes, more upgrades. But Galloway draws from ancient wisdom here. The path to freedom isn't about getting everything you want. It's about needing less. And that, right there, is Stoicism in practice. He paints a picture that hits home. Imagine two people. One makes $80,000 a year and lives below their means with a paid-off house, no debt, and full control over their calendar. The other makes $400,000 but is drowning in mortgage payments, private school tuition, luxury car leases, and a job that owns their soul. Which one is wealthier? The answer is obvious, but only if you've trained your mind to see it. The first person is rich in the only currency that truly matters: freedom. The second is stuck in a gilded cage, a prisoner of their own success. And this is where Stoicism becomes more than philosophy. It becomes survival skill in the modern economy. Because the world will always try to sell you things you don't need, convince you that you're behind, and push you to define your self-worth by external metrics. But a Stoic asks, what can I control? What I truly need? What if the win isn't more, but less? Galloway uses a Stoic lens to cut through financial noise. You don't need the latest iPhone. You don't need a status car. You don't need to post proof of your vacations to validate your success. What you need is clarity, control, margin, that space between what you earn and what you spend. That's where wealth lives. That's where peace grows. That's what Stoicism helps you protect. And here's the twist. Stoicism isn't about denying joy. It's about defining it on your own terms. The Stoic doesn't hate money. The Stoic just refuses to be owned by it. Galloway shares how, personally, Stoic principles have helped him avoid the trap of chasing status. He admits he's made millions, but the moments of real satisfaction weren't the windfalls. It was a walk with his kids, the ability to say no, the quiet days with no meetings, the space to think, to write, to breathe. Those weren't wins in the social media sense, but they were the real dividends of a Stoic mindset. He gives you a toolkit, questions to ask yourself often. What if I already have enough? What would I do if I didn't care what others think? What truly adds value to my life, and what just adds noise? Because in a noisy world, silence is a superpower. In a world obsessed with appearance, substance is rare. In a world that celebrates excess, discipline is rebellion. And that's what being Stoic is, at its core, rebellion against the madness of endless want. You want to be wealthy? Learn to sit with yourself and not feel the need to perform. Learn to say no without guilt. Learn to own less and feel more. Learn to chase meaning instead of metrics. Because in the Algebra of Wealth, being a Stoic is what allows you to keep your money, your freedom, and your peace when everyone else is burning out in the name of chasing more. Chapter 11, Play Offense. Scott Galloway doesn't believe wealth is built by playing it safe. Not entirely. Yes, you need discipline. Yes, you need patience. Yes, you need to manage risk. But once those are in place, once the defense is locked in, you have to play offense. Because if all you ever do is protect what you have, you'll survive, but you won't build. You won't grow. You won't thrive. And wealth, real meaningful wealth, isn't just about not losing. It's about winning the long game. Galloway makes it plain. Defense preserves, but offense builds. Playing offense means looking for ways to grow your income, grow your network, grow your skills, and grow your ownership. It's not reckless. It's intentional. And it starts with mindset shift, from scarcity to expansion, from fear to pursuit. Too many people focus their entire financial strategy on cutting back. Don't get him wrong. Spending less is smart. Living below your means is essential, but you can only shrink your way so far. There's a limit to what you can save, but there's no limit to what you can earn. So instead of obsessing over your coffee budget, what if you focus on earning more? What if you leaned into your strengths, started that side hustle, asked for the raise, launched the product, or pitched the client? That's playing offense. Galloway emphasizes 4 major offensive plays, for levers you can pull to go beyond surviving and start scaling your wealth. Increase your income. This is the most obvious and yet the most neglected. People get stuck in one job, one salary, one bracket. But if you want to change your life, you have to increase your earning power. That might mean switching roles, learning high-value skills, negotiating harder, or even moving cities. Do what you have to do, but get your income up. Acquire equity. The richest people in the world, they don't get rich from salaries. They get rich from ownership, whether it's stock options, real estate, or your own business. Equity is the difference between income and wealth. If you're building something, make sure you own part of it. If you're working for someone else, look for roles that include equity. Get skin in the game. Build something. Galloway is a strong believer in entrepreneurship as offense. It's risky, yes, but with risk comes reward. The modern economy offers more tools than ever to launch a product, a service, a brand. You don't need venture capital. You need courage and consistency. Even a modest business, if done well, can become an asset that produces for decades. Invest in yourself. This is a foundational play. Skills compound just like money does. Every course, every book, every mentor, every failure, it all sharpens your tools. Galloway urges you to think of yourself as a company and treat your knowledge, health, and mindset as your core infrastructure. When you level up, everything around you does too. But none of this works if you're sitting on the sidelines. You have to get in the game. Take the meeting. Pitch the idea. Ship the product. Apply to the role you think is out of reach. Say yes to the scary thing. Because while defense keeps the lights on, offense creates leverage, and leverage builds empires. He also makes a powerful psychological point. Offense creates energy. It puts you in motion. It gives you purpose. People stuck in survival mode often feel stagnant, anxious, reactive. But when you play offense, when you're pursuing something, you reclaim your agency. You stop being a spectator and start being a builder. And yes, you'll fail. You'll lose some plays. Not every pitch lands. Not every hustle scales. But if you keep making smart bets, keep learning from misses, and keep pushing forward, you build momentum. And momentum compounds just like money does. So how do you start? You start by auditing your week. Where are you playing defense? Where are you hiding, procrastinating, conserving? Then ask, where can I go on attack? Where can I take a bold step? Maybe that means launching the side gig, investing in the market instead of hoarding cash, pitching your work to a bigger client, taking on a leadership role even if it scares you, raising your rates because you're worth it, creating instead of just consuming. Whatever it is, do it now. Don't wait for perfect timing. Don't wait to feel ready. Offense is built on imperfect action. And this is where Galloway closes a loop. In the Algebra of Wealth, time plus discipline plus defense gives you stability. But offense gives you scale. Offense gives you acceleration. Offense gives you the chance to change the game entirely. So don't just protect what you have. Build more. Push more. Risk smart. Play offense. Because nobody ever built real wealth sitting in the bleachers. Chapter 13. Find your superpower. Scott Galloway doesn't want you to be average. The world already has too much average. Average effort, average output, average ambition. If you want to build real wealth, live on your own terms, and move beyond survival, you have to find your superpower. That one thing that sets you apart. The skill or trait that makes you not just employable, but undeniable. Your superpower isn't always obvious. It's not about being a genius. It's about knowing what makes you different, and then leaning into it with intensity and repetition. Because the market doesn't reward well-rounded. It rewards differentiated. Galloway says it like this: be great at something, not okay at many things, not mildly good across the board. Be exceptional at one thing and let that thing open doors. The challenge? Most people never give themselves permission to pursue greatness in a specific direction. They follow the default path. They major in something safe. They take the job that pays. They stay where it's comfortable. And in doing so, they bury their edge. But your edge, your superpower, is what turns a career into a calling and a job into leverage. It's what allows you to demand more, build more, own more. It's what separates the person who works for money from the person who attracts it. Galloway gives you the tools to find it. Start with self-awareness. What are you better at than most people? What do others come to you for? What are the things you do that make time disappear? Maybe it's your ability to speak and influence. Maybe it's your writing. Maybe it's your pattern recognition. Maybe you're relentless with detail, or a creative problem solver, or a connector of people. It doesn't have to be flashy. It just has to be yours. Next, double down. Once you've found the thing, go all in. Don't just maintain it. Master it. Study relentlessly. Practice daily. Test it in the real world. Get feedback. Adapt. Because in a noisy, competitive economy, mastery is the moat. It's the one thing AI outsourcing competition can't replicate. You operating at your best with a skill that punches above its weight. And here's the kicker. Your superpower may not be what you love. That's a myth. The follow your passion crowd often ends up broken, frustrated. Galloway flips the script. He says, don't follow your passion. Follow your talent. Passion follows mastery, not the other way around. You get good at something, you start getting recognized for it. That feedback loop fuels purpose. And before you know it, what started as a strength becomes your identity. He also reminds you your superpower is a living thing. It evolves. It can be sharpened or dulled. You may start with one strength and morph into another. That's okay. The key is staying curious, staying hungry and never coasting. So what happens when you find it? You gain leverage. You can charge more, choose better opportunities, set your schedule, build platforms, lead teams, create products. At scale, your superpower becomes the engine behind wealth, autonomy, and influence. And if you combine it with the other principles, discipline, defense, offense, stoicism, it becomes dangerous in the best way possible. Because now you're not just another player in the system. You're a person of economic gravity, someone people want to work with, follow, and reward. Galloway ends this chapter with urgency. Figure it out, then focus. The clock is ticking. This isn't a philosophical exercise. It's an economic imperative. In a global economy flooded with sameness, different is the most valuable currency. And your superpower? That's your difference. So stop spreading yourself thin. Stop blending in. Get radically clear. Get brutally honest. And then build the one thing the world can't ignore. Because in the Algebra of Wealth, your superpower isn't just your advantage. It's your multiplier. Chapter 14, Don't Wait. If there's one lie that's robbed more people of wealth than any market crash, any economic downer, or any poor investment, it's this one: I'll start later. Scott Galloway rips this delusion to pieces. He doesn't sugarcoat it. He doesn't romanticize the idea of waiting for the right time. He simply tells the truth. The biggest wealth-building lever you have is time, and most people waste it. They wait to invest. They wait to save. They wait to get their finances in order. They wait to figure out their purpose. They wait to start the thing they say matters most. But time doesn't care. It doesn't pause. It doesn't rewind. It just keeps moving, taking compound interest with it, either working for you or against you. This chapter is a call to arms, a punch to the gut. Galloway wants you to understand that waiting is the costliest decision you'll ever make, because it robs you of the one force that multiplies everything: compounding. It's not just about money. Compounding applies to everything: skills, relationships, reputation, health. The earlier you start building momentum, the more powerful your trajectory becomes. The later you start, the steeper the climb. So why do we wait? Fear, perfectionism, doubt, distraction, the false comfort of someday. But Galloway's message is blunt. Later is where dreams go to die. The markets won't wait. The job won't wait. That idea you're sitting on? Someone else is already building it. So he gives you permission not to be perfect, but to begin. Start where you are with what you have. Don't wait to learn everything. Don't wait for the ideal market conditions. Don't wait for full clarity. Those things are illusions. Start small. Start now. Open the investment account. Even if it's just $50 a month. Launch the side hustle. Even if you're unsure. Pitch the idea. Ask the question. Send the email. Show up every day. Not because it's easy, but because you decided to stop being a spectator. And this is where Galloway gets personal. He reflects on how every meaningful thing he's built, companies, wealth, freedom, started with imperfect action, not a master plan, just a willingness to move forward when others hesitated. He reminds you, the longer you wait, the more life closes in on you. Responsibilities increase. Risk tolerance shrinks. Time evaporates. What felt like freedom at 25 can feel like a cage at 45 if you never made the leap. The market rewards those who start early and stay consistent. And the game of life does, too. He also tears down another myth, that starting later means you've missed a boat. Not true. If you're 35, 45, 55, it's not too late. It's just time to stop telling yourself stories. Today is better than tomorrow, and action is better than anxiety. So what do? You commit, not to overnight success, but to the first brick, the first dollar invested, the first rep, the first sale, the first podcast episode. Whatever your thing is, begin. You set up systems that make starting easier. Automate your investments. Block off time for deep work. Surround yourself with people who are already moving. Limit distractions. Measure progress, not perfection. Because once you start, something amazing happens. The resistance fades, confidence grows, opportunities multiply, and that monster called someday, it loses all its power. Galloway's final word on the chapter is clear. There's never a perfect time, but there's a right time. And that time is now. Because in the Algebra of Wealth, waiting costs more than trying. Hesitation compounds in the wrong direction. And regret is the only debt that gets heavier with age. So stop preparing. Stop polishing. Stop delaying. Start now, today, this hour, this minute, and never look back. Chapter 15, Summary. So here we are, after all the chapters, all the math, all the stories, and all the wake-up calls, Scott Galloway brings home. The Algebra of Wealth isn't just a formula. It's a framework for a life of freedom. A blueprint not just for money, but for meaning. And now it's time to simplify everything into the equation that drives it all. Because wealth isn't magic. It's math. The formula? Wealth equals focus plus stoicism plus time plus diversification plus ownership plus discipline plus luck. Let's break that down, not as bullet points, but as a way of living. You start with focus. You can't be great at everything. You don't need a dozen side hustles or a flashy resume with 20 jobs. You need clarity. You need to pick a lane, get exceptional at something, and shut out the noise. Focus is a filter that turns talent into results. Then you add stoicism. In a world of shiny objects, hype cycle, and Instagram lifestyles, the stoic is immune. You stay grounded. You don't chase every trend. You control what you can and let go of what you can't. Wealth flows to people who are steady when others panic, and who don't spend every dollar to impress people who aren't watching. Next comes time. This is the engine most people ignore. Wealth doesn't explode overnight. It compounds. Slowly, quietly, powerfully. The earlier you start, the bigger your tailwind. But no matter where you are, time is either your greatest asset or your silent thief. Use it. Don't waste it. Then there's diversification. Don't put all your eggs in one basket, no matter how confident you feel. You spread your risk. You buy the market instead of trying to beat it. You invest across income streams, relationships, and skills. Diversification is humility in practice. It's saying, I don't know what the future holds, but I'm ready for whatever comes. Then comes a big lever, ownership. If you're trading your time for money and never building equity, you're on a treadmill. Wealthy people own things, businesses, stock, real estate, intellectual property. You want to get rich? Stop renting your labor and start acquiring assets that grow while you sleep. Discipline glues it all together. The best plan in the world is useless without follow-through. Discipline means investing even when the market's down. It means saying no to lifestyle creep. It means sticking with your habits when no one's watching. If wealth is a fire, discipline is the fuel that keeps it burning. And finally, luck. Yeah, it matters. Right place. Right time, right background, right introduction. But luck favors the prepared, the consistent, the patient. You can't control the roll of the dice, but you can control how many times you roll. Luck finds those in motion. Galloway doesn't pretend this journey is easy. It's not, but it's simple. The Algebra of Wealth doesn't require brilliance. It doesn't require perfect timing or connections or even a flawless career. It requires you to play the long game, own your choices, and act with urgency. So where do you go from here? If you haven't started investing, start. If you haven't found your superpower, search harder. If you're sitting on cash, put it to work. If you're buried in debt, make a plan. If your calendar is owned by others, take it back. And if you're waiting for the perfect time, it's already here. The path to wealth is about more than money. It's about freedom. The freedom to say no, to take a sabbatical, to spend time with your kids, to walk away from a toxic boss, to do work that matters, not because you have to, but because you choose to. In the end, wealth isn't about having it all. It's about having enough and knowing what enough looks like for you. So commit to the formula. Write it on your wall. Burn it into your decisions. Live it daily. Because in the Algebra of Wealth, you don't need to be the smartest. just the most consistent. And now that you know the formula, the only question left is, will you use it?